Cryptocurrencies are some of the most unique investable assets there are right now. If you have been paying attention to cryptocurrencies over the past year, you will know that cryptos are down a lot. Bitcoin is down around 20% over the past year. Ethereum is down over 30% year to date, and other cryptos like Solano and Ripple have fallen as well. These are just some of the major cryptocurrencies on the market right now. Many others have similar results. There's a lot of risk when it comes to cryptos, but there's a lot of upside too. Now, there is an option for investors who focus on dividends. There are dividend paying crypto ETFs that pay monthly dividends for investors who are looking to offset some of the risk of holding cryptos by getting paid monthly. This is something that I personally do, so that not only do I still get exposure to the crypto markets, but I get that monthly dividend just for holding these relatively cheap crypto ETFs. While the risk for holding these ETFs over an actual cryptocurrency itself is relatively less risky, it is still risky nonetheless. There are four crypto ETFs that I found that track some of the biggest cryptos there are right now. The first one I'm going to go over is one that is in my portfolio and probably the most popular out of all four ETFs. That is the NEOS Bitcoin High Income ETF, ticker BTCI. Bitcoin is the most popular cryptocurrency around right now. Not too much to go into about the coin itself. The BTCI fund seeks to distribute monthly income generated from running call options on Bitcoin future ETFs. It is actively managed by NEOS. The fund seeks to offer upside potential via efficient exposure to Bitcoin exchange traded products. Due to a recent sell off, the trailing 12-month yield sits around 45%, which is absolutely absurd. It also has an expense ratio of 0.99%, which is relatively high for dividend ETFs, but that high yield helps offset this cost. BTCI has a small sample size, with its inception being back in October of 2024. It has not missed a dividend payment, but its dividend payouts are relative to the returns of the ETF, so they have been decreasing. A volatile dividend-paying ETF with high upside nonetheless. The next ETF we have is the NEOS Ethereum High Income ETF, ticker NEHI. Ethereum is the second largest crypto right now. It is a decentralized software platform built on blockchain technology, known for its native crypto, Ether, or ticker ETH, and is widely used for developing decentralized finance applications. NEHI operates exactly like BTCI, but it tracks Ethereum instead of Bitcoin. The fund seeks to distribute monthly income generated from running call options on Ethereum futures ETFs. NEHI has an even smaller sample size than BTCI, with its inception being around a year later, back in December of 2025. With such a small sample size, its trailing 12-month yield is around 14%, but when comparing it to BTCI, both trade at near identical prices at the time of this recording, and NEHI has only made 4 dividend payments. But those 4 dividend payments were all higher than BTCI's dividend payments for its respective past 4 months. So it's safe to assume it has a similar dividend yield to that of BTCI, if not higher. And just like BTCI, NEHI has a high expense ratio of 0.98%. A recurring theme we will see here is that all of these ETFs are extremely volatile but offer high upside and good monthly income. Those 2 ETFs are managed by NEOS. The last 2 ETFs that I'm going to go over are managed by Amplify. The first is going to be Amplify XRP 3% monthly option income ETF, ticker XRPM. XRPM seeks to balance high income and capital appreciation through investment exposure to the price return of XRP and a covered call strategy. XRPM aims for significant XRP upside exposure and 36% covered call option income annually. XRPM has a small sample size to go off of, similar to the previous ETFs, with its inception being in November of 2025. For those who aren't as familiar with XRP as they are with Bitcoin and Ethereum, XRP is a digital asset and cryptocurrency native to the XRP ledger. The XRP ledger provides near instant settlement, eliminates high cryptocurrency exchange costs and risk, expensive bank transfer fees, and operates 24/7 on global exchanges. Essentially, XRP delivers fast, low-cost cross-border payments as a trusted bridge currency in global financial transactions. This monthly paying dividend crypto ETF currently has a trailing 12-month dividend yield of 16.2%. But just like we saw with NEHI, this is relatively low compared to the likes of BTCI due to such a small sample size. So when more time passes and there's enough data to reflect 12 months of price action and dividends, this yield is expected to shoot up. The price of XRPM is down a lot recently, and like the other ETFs, its dividends are reflective of price volatility. An advantage this Amplify ETF has over the NEOS ETFs is that this has a lower expense ratio, sitting at 0.75%. It's still expensive, but along 25% cheaper than BTCI and NEHI. XRPM is also less than half the price of the other ETFs, making it more cost effective as well. For investors keen on tracking Ripple, XRPM offers a lot for less. The final ETF that I will go over is the Amplify Solano 3% monthly option income ETF, ticker SOLM. SOLM has the same model as XRPM, but it tracks the returns of Solano instead of Ripple. SOLM seeks to balance high income and capital appreciation through investment exposure to the price return of Solano and a covered call strategy. By using weekly covered call option writing techniques, SOLM seeks to harness Solano price volatility, transforming into a valuable income opportunity. I'll briefly explain what Solano is and what it does. So, SOL is the native cryptocurrency of Solano. Every action on the Solano network requires SOL cryptocurrency, reinforcing its role as both a utility token and a key driver of network activity. Solano is used for smart contracts, high-frequency trading, stablecoin transactions, tokenized assets, and decentralized finance. SOLM has the same inception as XRPM, being back in November of 2025, so yet again another small sample size to work with. SOLM is currently the cheapest ETF of the bunch, trading around $10 a share right now. Its trailing 12-month dividend yield sits around 22%, paying out monthly. And again, like we've seen with the past two ETFs, due to its low yield, the 22% might not be completely accurate. More data will help its case or make it worse over time. It has the same expense ratio as XRPM, sitting at 0.75%. Those are the four crypto ETFs that offer investors high monthly dividends. Now, from everything we've gone over about these cost-effective, volatile ETFs, there are some key takeaways. Please remember this is not financial advice. These ETFs are very risky and might not be suitable for all investors. They offset some of the risk by offering monthly income. They are cost-effective options for tracking the respective crypto depending on which ETF you hold. Since the beginning of 2026, every one of these ETFs are down a lot, with SOLM being down the most and BTCI being down the least. This goes to show you that they are extremely risky, however, offer an opportunity for those who can afford to bear the risk. Thank you for watching my video on how to make money while holding crypto. I hope you enjoyed the information and data I provided. Okay, bye.